Let's talk about what's going on with AMC. Hello and welcome back to another video. I'm your host, Young Buffett, and I thought I'd make this video. It's a little different than the other types of videos that I make, but I saw a lot of questions and I saw a lot of newer people have interest in AMC. And I realized that not everybody knows what's going on, or not everybody has the right context. So I thought I'd put this video together, give a quick little recap and introduction into what's going on, and maybe we'll learn something along the way. So definitely stick through this video. Let me know if you have any questions in the comments, but let's talk about good old AMC, the American Multi-Cinema. So quick intro about me. My name is Young Buffett. I have 15 years of experience in the stock market. I bought Microsoft when it was $17 a share. Now, why did I do that? I was a kid and I played Xbox with my friends. So that was my investment strategy. I bought companies that I liked. I bought companies that I knew about. And that's why I really resonate with what's going on with stocks like AMC. People are buying the stock not only because it's heavily manipulated, but because they know the company and they like the brand, they like the product. And that's how I got started with investing. So I'm a long-term investor. I have a long-term portfolio. I'm a swing trader. I have a swing trading portfolio. And I'm an options trader. I have an options trading portfolio. So what I'm doing on this YouTube channel is currently I'm documenting my journey investing in meme stocks and momentum stocks, stocks that are shorted, stocks that are manipulated, interesting, fun, volatile, hyped, controversial. I'm getting my feet wet with them and learning more and more and documenting that journey so hopefully other people can learn more as well. Most importantly, I am absolutely not a financial advisor at all. Take everything I say with a grain of salt. Do your own research. Nothing in this video or any of my videos are financial advice or recommendation to buy or sell anything, okay? It's just for educational purposes, and sometimes it's even a little entertaining. Now, quick history about AMC. It was founded in 1920, so 101 years old now. It was founded by three brothers, Edward, Maurice, and Barney Durwood. AMC was the first multiplex, so that's a movie theater that has multiple screens. I thought that was cool. And it's the first theater chain to introduce the addition of cup holders to their armrests in 1981. So fun fact, before then, they didn't have cup holders in their seats. They would have to hold their drinks. And as of March 31st, 2021, AMC owned or operated approximately 950 theaters and 10,500 screens across the world. There are a few people you need to know if you want to understand what's going on with AMC. The CEO, Adam Aron, so he's been the CEO since 2016. He has his bachelor's and MBA from Harvard, so he's a smart guy. And he's the co-owner of the Philadelphia 76ers since 2013. Now, why is he important to know? He has a Twitter. He's a very powerful person. He's the CEO and leader of this company that everybody loves. And he's very self-aware. He tweets about APES. He tweets about what's going on with the stock. He tweets about the company. So he is a friendly figure in this landscape that I'm about to unfold for you guys. Now, the next group of people that you need to know, Reddit. So Reddit, there's a subreddit called AMC Stock. There's also a subreddit, Wall Street Bets. There are a lot of different subreddits actually, but AMC Stock, r/AMC Stock, has about 405, probably more now, 1,000 members, 405,000 members. These are all people who like the stock, want to see what's going on with the stock, and are actively talking about the stock. These people are called apes. And they call themselves apes because they're stronger in a group. They're stronger together. And apes are like that in the wild as well. And finally, the last person or people you need to know about are hedge funds. So hedge funds are companies that hedge against stocks. They trade stocks and usually to the downside to protect their investment portfolio. And there are these companies, Citron Capital, Maverick, Citadel, Mudrick, and there's more. I just didn't want to list everything, but that's all you need to really know, is that there's hedge funds involved. There's some lingo if you're new to all of this. If you're scrolling through the subreddit now that you know that's a thing, BTFD, buy the effing dip. So you'll see people saying this or spamming this in comments when a stock is going down that they like, that they say it's dipping, so you should buy it. So that's a common common word that you'll see. Diamond hands is another very, very common word you'll see, and it refers to the opposite of paper hands, which is number 3 over here. So diamond hands are people who are buying the stock and holding it, and they're not letting go. Their hands are heavy, their hands are strong, and they will not sell. Paper hands are people who have light hands, who are quick to react, who are fidgety, who are weaker, who buy a stock and then sell a stock the next day or the next week. Or they're not in it for the long term. They're paper hands. You'll see 2 letters, DD. DD stands for due diligence. It's usually tagged as a flare on a post that says, this is my due diligence, this is my research, this is what I found. And a lot of people like reading the DD because it'll either justify what they were thinking with data and facts, or it's just interesting information. You'll also see tendies. People say, I want those sweet, sweet tendies. So tendies are, actually, I think it originated from chicken tenders. And then that originated from when you win, winner, winner, chicken dinner. So you can make a bunch of different origin stories, but tendies are pretty much gains, your wins, how much money you made. YOLO, if you don't know by now, I'm going to need to make some other videos to explain a lot more things, but you only live once. That's what that stands for. It usually stands for, you say this when you make an extraordinary bet on something and you put everything into one thing, and you only live once, let's see what happens, type of thing. Then you got a bag holder. That's somebody who is left with the bag. That is somebody who is left with money on the table. They are stuck holding a position. Stonks, stocks, just misspelled. It's been a meme since about 2017 or 16. Then apes, we talked about, but group of people who are stronger together. But you have smooth-brained apes and you have wrinkly-brained apes. Smooth-brained apes are people who are a little simpler to all of this. They're not as educated and they don't really know what's going on, and they're there for it to see what's going to happen. They're just smooth-brained. They don't really care about the due diligence that we talked about earlier, the data, the numbers, the analytics, and all those stuff. They don't understand it easily. And then you have wrinkly-brained people who have more wrinkles in their brains, who are smarter, more educated, talk about their due diligence and numbers, analytics, data, and stuff like that. So let's talk about vocabulary beyond just the lingo. These are important things that we need to understand. I have a couple slides on this stuff, and you could go deeper and deeper. I could have videos on every single one of these topics. So let me know if you're actually interested in that. Also, while you're down there commenting to let me know if you're interested, make sure you hit that like button so more people can see this, and it'll just overall help the ape movement here. And make sure to hit that subscribe button. I had to say it. I couldn't go a video without saying that. If you like content like this, please hit that subscribe button so you don't miss my videos. All right, back to actual vocab. So we got shorts. Shorts are when an investor borrows a security and sells it on the open market, planning to buy it back later for less money. It is a bearish position. Short interest is the number of shares that have been sold short but have not yet been covered or closed out. So when you're borrowing a stock and you're shorting it, there are a lot of different ways to do that, but we look at the short interest because that helps the stock go down. And when you have to cover that position, you have to buy shares and provide those shares to the person that you promised you would sell it to. So that makes the stock go up if you're looking for it to be covered or closed out. You also have failure to deliver, FTD. This has been a huge topic recently in the subreddits and everywhere. It is a situation where one person on the trading contract, so think of it like the shorts and the people who are buying the stock, those are the two people involved. It's a situation when one person, whether it's shares, futures, or options, or forward contracts, they don't deliver on their obligation. There was a failure to deliver those shares that they promised. In the case of buyers, it means that they don't have the cash to be able to buy it. In the case of sellers, that means they don't have the goods. They don't have the stock or the option. They were borrowing it. It's not real. They don't have it. So there's a failure to deliver. Also, another thing that you should know about that is there's a time frame that you have to make sure you satisfy that. And I'm not going to get into that in this video, but it's getting bad. People are extending the timeline. I think it's like a T30 at this point where you have 30 days to make sure you deliver, but then it's getting super sketch because they are borrowing more to cover what they promised, and it's becoming kind of like a Ponzi scheme in my opinion. Then you also have float. So the float is the number of shares available for trading in a particular stock. So think of it as how many shares are out there for us to buy. Going to synthetic shares. So synthetic shares are short positions that are using options because it is easier than borrowing the stock and selling it short. So you can literally buy 100 shares of a stock. You own those shares, right? And then you can short the company. You can short those stocks by selling a covered call, for example. And you're not borrowing a stock. You own that. So you're allowed to do that. It's very easy. But there's also a way to synthetically do it by using options. So that's what synthetic shares are. This also applies to long positions, as traders can mimic a long position in a stock by using options without having to lay out the capital to actually purchase all of the shares. So this is another very important topic that a lot of people are talking about. There might actually be a lot of synthetic shares on AMC, making it a very interesting candidate for a short squeeze, but we'll get into that. Then you have dark pools, another very touchy subject that's been coming up. So dark pools were invented back in the 70s or 80s, I believe, and it's a private asset exchange that it's designed to provide additional liquidity and privacy for trading large blocks of securities away from the public eye. So pretty much you and I can't do it, but giant institutions, for example, they have these giant pools. Think of it like black pools that you can't see inside of, but when you're inside, you can see. And these people are buying and selling and shorting and borrowing within this liquidity pool that we can't see what's going on. So it kind of creates an opportunity for manipulation, and that's why a lot of people are talking about it. And finally, you got short squeeze and gamma squeeze. So short squeeze is when the stock price shoots up and it accelerates the stock price as short sellers, those people who were shorting the stock, have to buy those shares and cover their positions to cut their losses and just exit. When you want to exit a short, you have to buy and provide and get out. And that process sends the stock price up, because if the stock price is down, you owe somebody shares, you have to buy shares. The more shares you buy, the more the demand goes up and the supply goes down, and it sends the stock price up. Now you got a gamma squeeze. A gamma squeeze is when the stock price begins to go up very quickly within a short period of time as more money flows into call options from investors, and that forces more buying activity, because when you're buying a call, that means somebody's selling a call. And if you're selling a call, that means they need 100 shares. So if you're buying a lot of calls, people need to buy a lot of shares to cover your call. And that sends the stock price up as well. So those are the two different types of squeezes that you'll see people talk about. Now, why is all of this even happening? If you remember this guy, Roaring Kitty, Keith, he really, really liked GameStop. And he thought GameStop was kind of manipulated, and he really liked the company and the brand and the value that they provide. And he started posting on Wall Street Bets his GameStop YOLO update. He would post YOLO updates. He bought a lot of the stock. He bought a lot of options. But pretty much by the end of it, I don't know what it's at right now, actually. This is just the last thing I saw. He had about 34 million in it with a gain of 19 million. So he made a lot of money exposing what's going on with GameStop. And when this was happening, it kind of piqued everyone's interest on Wall Street Bets and these other subreddits on what other stocks are heavily manipulated. This guy noticed that GameStop's float, the available shares, people were borrowing and shorting more than the shares were even available. So that's what led to this, where everybody's like, wait a second, if GameStop is doing that, what about Nokia? What about BlackBerry? What about Bed Bath & Beyond? What about Naked? What about AMC? These are all shorted stocks. GameStop, AMC, Clover Health, Workhorse, Bed Bath & Beyond, BlackBerry, Nokia, Naked, Space, Tesla, Mavis. There are a lot of stocks that are shorted, which, by the way, is actually normal. I mean, shorting is a part of of our economy, of the stock market. But when you're shorting more than what's available, that's what causes this problem, and that's what people are interested in looking at. People like these companies, and people go to AMC. I grew up in GameStop. I would always ask my dad, can I go to GameStop? I want to buy a new game. My friends are playing this new game. It has a special place in our hearts. AMC theaters. A lot of people had their first kiss there. It's just brand value. So brand, the experience, the product, it gives you that value proposition. That's why people are so in love with these companies. BlackBerry and Nokia. Think about your old phones like 10, 15 years ago. Now, why are people so mad? Why do people hate the hedge funds for shorting? If I said it was normal to short, why are people so mad? Well, think about in the middle of a pandemic, slowing economy, Americans, they've named their villain hedge funds. I pulled this from an article. Their nemesis is summed up in a few searing images. A hedge fund manager who makes millions betting that the subprime mortgage market will collapse without warning anybody. These people benefit from a stock going down. These people benefit from suppressing and manipulating stocks. They have a lot of money. Think of them like a piñata. The squeeze, it's to rally the share price and make profits for us, for retail investors, while forcing the hedge funds who are chilling on their yachts as the economy's tanking to transfer over that wealth. So honestly, just think of it like a piñata. I'm nothing against piñatas, but if there's money in it, I'm going to hit it. Now, AMC is shorted. AMC is manipulated. Fun fact, more than 80% of the shares that are held by the broad base retail investor. So this average, what's it called? Average holding around 120 shares. That's been kind of disputed. We'll talk about that a little bit. But more than 80% of the shares that are available, retail owns. That means we have power. Okay? So this was pulled from the AMC's actual investment portal, their website. This doesn't happen. Most of the time, giant institutions and different companies, banks, even the company itself, they own the majority of the shares. But there's a unique case where retail investors now own a lot of the shares, the majority of the shares. That means we have voting power. That means we have say in what happens in the company. It's just difficult because there's so many people who own the stock that it's hard to kind of force everybody to vote a specific way. You know what I mean? Like, it's hard that 80% is divided by so many people, but it's still very important. Now, I don't know if you've seen this, but so earnings is on Monday, okay? August 9th is our next quarterly earnings call. There will be a webcast so we can all listen, as always. And for the first time ever, AMC will take questions from individual investors on the call. So that's really, really important because, again, we own 80% of the company. There's a website, Say Technologies. The link is here. The link is in my description. You have not even a couple hours left. You need to register your shares. So you sign on the website and you make an account with Plaid. Very trusted. I like them. You can even change your password before you link it to Plaid and then change your password back if you want to protect your account even more. But essentially you register your shares and it says Young Buffett has 25 shares of AMC. And then you can then vote for different questions that people are asking on this call. The top one is from Timothy, and it asks about dividends, and people are using that top question to track how many shares everybody has. Now let's talk about that real quick. Feel like having your mind blown? There are only 513 million shares available, right, for AMC. That's the float. Currently, on the Say Vote location, so that Timothy share thing that I showed, 62.6 million shares have casted their vote from only 58,100 shareholders that have voted. So only 58,000 out of the 4.1 million shareholders have voted. Okay, it's very small. Let me make this clear. 1/70th of the shareholders have voted, and we are at 1/8 of the entire float. Now imagine if all 4.10 million of them voted. That would be 70 times the amount of people that have currently voted. 70 times 62.6 million is 4.4 billion shares. Let that sink in for a minute. You could not ask for a more definitive proof that there are billions of shares for AMC. Now, this math might be a little off because not everybody has the same amount of shares, and it's just accounting for averages here. But it's still a very important question that goes back to the terms that we covered, synthetics and borrowing shares and not really knowing how many shares are actually out there. It makes it very clear that there is a lot of manipulation going on. So on Monday, there's earnings. It's after hours. And what you essentially need to know is that revenues are expected to be about 341.3 million, or it's going to be up about 1,700% from a year ago, which makes sense because of the pandemic and stuff. But over the last 2 years, AMC has beaten their EPS estimates by 13% of the time and has beaten revenue estimates 88% of the time. So I'm expecting that they're going to be fine. I'm expecting that they're going to report some good numbers. If anything is a crazy beat, that's really good for the stock, right? If anything is below the reported numbers, that might not be as bad, but the most important thing you need to know is guidance. What are they going to say about the next quarter? What are they going to say about the next year? What are their plans? How they answer questions? Are they going to bring dividends back? There are a lot of different factors and a lot of different catalysts that we need to keep in mind. So it's just important to see how it all plays out. Now, everyone's favorite question, where is this stock going to go? How much is this stock going to be worth? What happens if a short squeeze happens? How long is it going to happen for? Listen, the stock right now is at 32.70-ish. It could go to 20. Could go to 10. It could go to 40. Could go to 70. Could go to 100. If it breaks past 40, it's heading for 70. If it's breaking past 70, it's going for 100. If it goes to 100 without a squeeze, I don't know where it will go after there, but if there is a squeeze type event, and if the math is right, where there are a lot of synthetic shares that need to be covered, hedge funds and other institutions that have borrowed so many shares will panic and buy, cover, sell, cover their position. They can't borrow anymore, and so on and so forth, sending the stock price to 200, to 500, to 1,000. Something similar happened to Volkswagen back in the day when they got announced that a company had bought like 80% of their shares. All of the people who were shorting Volkswagen sent the stock price soaring as they exited their short positions, and I believe it hit about $1,000 a share at one point. So some similar scenario could happen, and they're calling it the mother of all squeezes, where AMC stock price can go from 200 to 500, from 500 to 1,000, from 1,000 to 5,000, 10,000, 100,000, and I've seen some numbers as high as $800,000 per share, which that's just insane. But the math might be there. So again, nothing in this video is financial advice. I am just recapping and documenting this whole thing. These are the numbers that people are talking about. What can you do? Sit back and wait, see what happens. You can scale in. You can buy some shares as it consolidates. If it goes up, you don't have to buy. If it goes down, you could scale in 1 share at a time, 10 shares, 20 shares, 100 shares, whatever you're comfortable with. See where it goes. I don't know. Treat it like every other investment. But this is just a really interesting stock. It's really interesting to see how it moves. And that's why I'm in it, documenting my journey. And it's been fun so far. But to recap, apes are buying and holding. Hedge funds are borrowing and shorting and manipulating. Do your own research and ask me anything. I get back to every single comment. Every single one. Just let me know if you have any questions. Let me know if you need any links to any resources. Think of me as your safe place in the stock market. If you want a safe place in the stock market, hit that subscribe button. I love you guys. And I'll see you guys in the next video.